The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to a January 4th, Friday edition of the Power Trading Hour at your headquarters for technical trading and investing, TFNN.com. Today, we've got kind of a market, kind of a little mushy out here. We'll talk about that in a few minutes. Up about 4 points on the S&P cash. Today is World Hypnotism Day. It celebrates the hypnotism of learning to hypnotize yourself to quit smoking or drinking or whatever out there. I had a friend that was into hypnotism. Apparently there's a lot more into it than you would think, but I don't know if he actually had that much success. He made a lot of people cluck like a chicken. But he had one very interesting thing about hypnotism to tell me, and that was that it didn't work on dumb people. He said the smarter the people thought that they were and less impervious to it, the better it worked, which I always thought was kind of interesting. But there's a lot of self-hypnotism out there. Not quite sure whether it seems to work. Never really talked to anybody. I never smoked, so I never needed to quit. But I'm wondering if it does any good. I always liked the mentalist. He was always hypnotizing people instantly. I know the basics of it. I read a little bit about what's supposed to work. Whether it does or not, I have no idea. I always liked that show. He hypnotizing people, get him to tell him anything he needs. It's interesting. As we go through some of the news out here, today we've got a new movie starting. And kind of interesting. It's Matt Damon behind it, and he's big into politics, of course, against fracking and for electric cars, all that kind of stuff. The funny thing is that most of this fracking stuff is built on lies. We might see a little bit of the market reaction with this movie coming out. Interestingly enough, everybody quotes a really bad documentary about fracking where the water was on fire in this little town, and supposedly it was because of fracking. Well, since recorded history, and the first person that was there when they sunk a well, the methane was coming out and bursting into flames in 1669, long before there was any fracking. So, you know, the problem is that a lot of people have an agenda. This is one of those agenda movies coming out. I don't know if it'll have a big effect or not. Kind of interesting. Probably the most interesting thing is guess who funded the movie? No one would pay for it over here in the United States because they knew it was kind of a big loser. Probably not going to make a lot of money, although the people say that have seen the movie say that if you took the politics part out of it, it's probably not a bad movie. But the most interesting thing is who financed it. The Arab Emirates. Yeah. So funded by, of course, the biggest supplier of crude to our country. And kind of interesting that someone that exports a lot of oil would not want us drilling for our own energy over here. But interesting nonetheless. Again, probably the biggest thing happening over the next week or so is going to be the Consumer Electronics Show, at least for me, especially the NASDAQ. You get more news in this next 7-day cycle. On the average, about twice as much news as any other week, even when there are big weeks out there. So keep an eye on anything in tech out here and when it moves. Natural gas popped up a little bit, and we're looking at going to be looking at that. But we did get the draw, well, at least the first drawdown that we were looking for in the marketplace. Excuse me, I got to sneeze. Well, I think I'm only going to sneeze once there. But anyway, we had the first drawdown. We've been looking for that for a while. And you're going to probably need about 3 more of those in a row to really get natural gas rolling again. But had a nice little pop out here 2-day. It's up about 3% for the UNG anyway. And let's see what the actual, up about almost 9 cents on the actual gas contract. So we'll be keeping an eye on that. But again, I think you're probably going to be bouncing around here at these low ends until you get about 4 weeks of drawdown. But this is the first big clue that we are going to see enough drawdown to get natural gas moving up there. Job numbers came out today, kind of in line, ticked up just a little higher. I suspect that we're going to probably be seeing about 8.1 in the next 60 days. That's based on how many the military are going to be rotated out and back into the business sector. They'll be out there claiming their unemployment probably fairly soon, since there's not a lot of jobs for them as they rotate out. But looks like the best I can see, the first 100,000 of the drawdown in the military pretty much going to be coming out over the next 60 days. So I'm looking for that jobs number to get weaker and weaker. I haven't heard a lot of people talking about it, but I don't think a lot of those people are going to have instant jobs as they come back out. But that's pretty much. We want to look at the market here fairly quickly today. Probably the most interesting stock out here for a market that's only moved about 5 points up and down today, and that is Apple. Everybody was talking it up. All the talking heads were saying you couldn't buy enough Apple on Wednesday, and been continually one of the weaker stocks out here. Of course, it popped up on Wednesday, got a lot of shorts to cover. Wasn't a whole lot of volume. We're pulling back again today. We certainly need one more retest, I suspect, of that 505, 501 area where we hit in the last couple of times. And, I think if the energy falls out here, then maybe 500 is going to be an area where this thing can hold out. Just because of the this last bounce being so weak, I suspect, though, we're building up power to break this down, and we're going to at least wash some people out to probably 485, I would imagine, and see that level tested. And if you start getting volume there, then that would probably confirm a long-term ABC down that will probably go into the 390 range. But we'll wait for that to happen. I'm not going to anticipate it too much, but I continue to see Apple's earnings, at least their margins, continue to crumble. And, just look at Intel. If Intel's normally around 59, 65% profit margin, that's the kind of margins that Apple had for 3 years running in the iPhone business. And that is getting weaker and weaker by the moment. A lot of these carriers are starting to negotiate lower numbers for these iPhones, using Android as the tool to do it. I don't know if they've been too successful, but I suspect this year that it's going to be awful hard for them to pass along as much as they had. Look for Android, or at least iPhones, to probably go up in price to people that are starting new contracts. I think that's going to continue to be a weaker problem out there. Wanted to look at some of the other stocks that were moving out here in the marketplace, at least the big movers out here. Gold, GOLD, which is Rheingold. We're right into these gaps that have been a couple of them out here. We were looking for more volume. I don't have contract volume yet in gold, but I suspect this is the big move for gold. I thought for a while that everybody thinks this is going to probably pull back to 1,500. I think we could get a rush to the exits. Probably not justified, but I could see 1,250 coming back and still seeing a long-term gold market move higher. And people that haven't been around in gold for a while just don't understand how narrow the exits are when everybody else fire. And I still think that we could see 1,250 without a problem before the next major move goes up. Not saying we will. I think 1,500 is fairly likely right now. But we'll see how these contracts come in. But I see a lot more weakness, see the dollar strengthening probably over this next 6 months. Why are we going to do that? Yesterday during the show, I didn't have time to read it, but The Fed minutes came out, and they are going to be cutting on their bond buying. Right now, they're buying about $86 billion worth of bonds every month. That's probably, I read the language, and I think what they're trying to say is they're going to start cutting down probably the mid part of the summer on how much they buy every month. So they're not going to just turn the spigot off all at once. But I suspect you should look somewhere around June or July of them turning that off. That means probably interest rates go a little higher and probably good and strong for the dollar, which is going to mean that equities are going to pull back a little bit. Besides job numbers, at least unemployment going up a little bit because of the military, what would you call it, the round down, pullback in military forces here in the United States. I think we're going to see probably a good week, 6 months as the market gets used to probably a dollar on the dollar index that is probably going to stay well above 80 and probably up to 85, 86, 87. I could see that through the rest of the summer. And probably going to start seeing a little bit more movement in this market starting today as people get the first paycheck for the new year with the new tax structure pulled out of it. A lot of them are probably going to be wrong because no one knew what to actually expect. But especially today, probably in another 2 weeks, people are going to notice that they have, on an average of 4% more taken out of their paycheck, and going to wonder why, since they don't make over $400,000, they paid more. Going to see, you saw what? More taken out? I was talking to my engineer because I just saw him get the paychecks, and I was wondering how soon it would take for people to figure out. It was noticeable, and I got the shaking head. So thanks to Steve. I'll try to ask him during the break exactly how bad it was. But I think we're probably going to start seeing a little bit of buyer's remorse over the next few days. Okay, pretty significant. You just IM'd me. But we'll take a look at that. Anyway, Randgold, this thing is coming back into two gaps down here. I don't see a lot in it right now. I don't want to see anything else that moved. Volume has been kind of light so far today, especially compared to the previous 2 days. The market is up a little bit, 4.5 points. Just 2.3 billion shares today, which means we're probably going to end up with around, 2.9, 3.2 billion shares on the consolidated New York Stock Exchange tape. That's going to be rather minor. This is going to be the last day of margin calls also. For those people who are way too short on margin, they will have to probably cover before the end of the day. On the third day, there's always a little bit of forced margin calling. Hopefully there weren't too many people out there on margin, but there's always a lot of people that probably just go a little bit too far. And, normally see a market hold up for at least 3 days on this. We'll be back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pezzamento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
A few of the other stocks that are moving out here. Qualcomm off about 1.5%. Take a quick look at that and see if there's anything in that. Kind of like I said, this whole market is... at least the individual stocks are up against high volume down gaps. Qualcomm came up against that gap that started on high volume on March 19th. Or is that April? April 19th with almost 42 million shares. You've come into it with 15 million, 11 million, and 17 million, but it just hasn't been able to break above that gap that starts around 65.50 or so, 65.25 in there that came back, and it's been around all year long. Energy's not, does it look horrible? No. Does it look like it can come back and fill this gap to 62? I suspect that that's what we're going to get over the next few days. Looking for the S&P to pull back below 1450 on the S&P cash and see, probably Monday, Tuesday, Wednesday, we're going to have a pullback. That pullback's going to tell us whether this is a false breakout like we've seen in so many individual stocks. But probably going to see that pullback. Not a whole lot, maybe 15 points lower. That could happen in a day. Then we're going to go into the expiration cycle. Of course, the options expire on the 18th of this month. So what we're going to see now is Wednesday, which is the 9th, the option market makers get ready for option expiration. Normally, it's the counter move to the market So we could see this thing push down through the 9th, maybe find a low, and then maybe they'll hold it up through expiration. But we'll have to see. I could still see that we could bounce around here for a while. Just on the low volume today, normally you want to give the market 3 days to rally. So probably Monday, give us one more look at whether this market can rally any higher out of here without a pullback first. But so many of these stocks like Qualcomm, we're seeing weaker today that were the darlings of the marketplace, just like Apple. We already looked at Apple. Xilinx, another one down 1%. Microsoft off 1.3%. Baidu off 1.2%. Kind of a quiet market, actually, for the most part. I'm going to go see if there's anything else here. Marvell up about 3.5%. Of course, they got hit just last week with the patent lawsuit. I always thought that patent lawsuit was probably going to get overturned. And frankly, it had a lot more to do with their core business technology than it has to do with this. But good chance this thing's going to come back and test just under $7, which is the December 27th low on that notice that they had lost the patent lawsuit. We're going to owe about $1.5 billion. They make a lot of drive controllers, and this has a lot to do with quantum physics. And I think you're just not going to find too many juries that want to even know about quantum physics and the way it works. But these were drive patents and drive controller patents on the way that quantum physics affects magnetics. And if you don't think it does, your hard drive only holds that much data because of some of the quirks of quantum physics and magnetism. And they use that to actually put about 10 times more than a drive would normally hold. But look at that. NVIDIA's up a little bit, 41 cents, not a big deal. RIM's up 3%. Again, this is just the Walking Dead. They don't quite know that they're dead yet. Probably going to take a while. Expedia up about 2%. Google up about 2%. I want to look at that real close because it has been an interesting chart. It did pop out. We're going to see volume's probably going to be a little lighter than the last time we were up here on the 17th. But you're back into this high volume down day. They had a little good news out here. The SEC is not going to push them on restraint of trade on their searches and the way that they rank them. I kind of alluded that they dodged a bullet on the Tech Insider Hour with Tom O'Brien, which I'll be on tonight in the second hour. So we'll look at that. But we're still into that high volume down day of 12.5 million shares. 3 million shares, 3 million is just not going to do it. But to my extent, I'm thinking a lot of these that have gone a little higher today on lighter volume is that last day of margin calls, seeing just a little bit more pressure in this market. When we come back, we're going to start looking at some of the other ones that I've had in the newsletter this week and see how they have turned out. You can always give me a call at 877-927-6648. That's 877-927-6648. I would appreciate your call.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, we're going to get into a few stocks. You can give me a call at 877-927-6648. That's 877-927-6648. And we're going to look at first Norfolk Southern, because all these railroad companies are looking fairly good. Had some news out here earlier, about an hour ago. CSX was up, Canadian National Railway was up, Canadian Pacific, Kansas City Southern, Norfolk, which we're looking at here, Union Pacific. Most of these things were up a good percent. And I suspect they're going against these high volume down days, no volume yet. But these might buck the trend. I haven't heard if there was news on the closing of the Mississippi, but I think people might be anticipating it. If you're looking at a stock that may bounce and jump on good news or a move up on the market on Monday, I'd be watching these rail companies, because they shut the barges down over the weekend or something. You could have a nice double whammy, if I'm wrong, on the market pulling back a little bit here. One of the ones I'm thinking that has a good organic reason for going up, at least short term. Some of the stocks that we were looking at that we wanted to talk about had been up at these highs at very light levels. We're going to have the same thing again today. So even lighter volume probably, but a lot of stocks that normally carry high short interest, and I wanted to see how they were doing. I wanted to start with Open Table, of course, a huge high flyer that's come back to earth. This is back challenging the February 6th high that had 1.1 million shares at $52.64. Gone over that the last couple of days. So looking for 1 million shares, she had 364,000 yesterday. Going to have a little bit more, about 550,000. 550,000 shares today. But on a one-year basis, kind of nice. If you look at a longer basis, this thing's still working to probably come back to the $33.53 low that happened at August 2nd low of this year. Did gap up, had some nice volume, but probably going to work back into that $36, $38 range here eventually. But one of the mighty have fallen. Other stocks we want to look at here is Robert Half International profile. This thing's been working, getting it to the $34.28 high. That's from the January 26th of 2011. You know, on a shorter scale, we're looking at $32.32 that had 4.3 million shares on April 25th. Did we get anywhere close to 4.3 million shares? 1.7 million shares, 1.7 million shares, and a whole lot less today. So that's kind of where I'm thinking that we're going to get a little bit pullback. I'm seeing a lot of these stocks, individual stocks, that have hit these highs in lighter volume, where we're seeing all the action actually in the ETFs. Probably a lot of people on the short side and they're running the ETFs, but not dragging a lot of the stocks underneath them or with them. We have ROT10, RKT. This is one that was down on huge volume. It's coming back and filling its gap. Of course, that gap happened on the 2nd of November with 3.8 million shares. We're in with that, and we're going to have less than 1 million shares here today. So we'll probably start looking at these coming under huge assault as people that had been long for a while finally get their money back, are more than willing to start piling back in. Riverbed Technologies, another one of these patterns that I'm looking very hard at. This came down heavy on October 31st with 18.5 million shares. What have we had the last 3 days as we've come back into that gap? 4.4 million shares, 3.2 million shares, 3.8 million shares. Yeah. So let's say we get 5 million shares today. Still going to be coming in and filling these gaps with a lot of light volume out here. RVBD is the symbol on Riverbed. Constellation Brands. Let's take a little look at this one. Kind of late for this stock to actually rally above, and you know you're going to probably come close to closing below the October 17th high, $36.98, 3.5 million shares. You had two nice candles, but not a lot of volume with them. Certainly, as we went over that last high, 2.4, you're going to be 30-35% short volume on this. And now that it's pulling back, any close below 36.98 would be a sell signal on that. And not a huge thing, back to $33 or something. But a lot of these stocks are in these channels are just not proving volume. I want to check markets real quick. We're up 5 points now. 2.4 billion shares on the New York Stock Exchange tape. And you can give me a call, 877-927-6648, as we look at some of the other one. Union Pacific was another one out here. Again, light volume. I think this is a little anticipation. We could see these things pull back on Monday if they don't close that Mississippi River, or delay it yet again. But probably going to see a good answer by Monday on what's going on. But you're going up against highs that had the previous highs out here on October 18th, 3.4 million shares, 2.9 million shares on September 14th. So we've gone starting to get above that last few days. And today, nice little candle up here, but maybe less than 1.5 million shares today. A good indication that these stocks are going to bounce very hard Monday, one way or the other. If you're an intraday player, you're probably going to find some good action on them. We've got stock. For some reason, my internet is in here every once in a while. The other one I wanted to look at out here was Moo. Second. And this thing's got a problem. Restart it. And now, machine's locked up. Just a second. Go. Start. And we were looking at Moo when we were so rudely interrupted in here. Another one that's gone above its previous high. MOO is the symbol on that. Again, last major high was on 700,000 shares on December 19th. Had the last 3 days, 300,000 shares, 200,000 shares. If this is right, 49,000 shares. Got to be watching that agriculture sector. I suspect that's also a play on how much money it's going to cost to get both the fertilizers. I remembered that today. The fertilizers and the grains back and forth, winter wheat down the Mississippi, whether or not it's on train or whether or not it's on barge traffic. So keep a close eye on that. But just on a normal one, probably some nice day trades out here on Monday on anything that has to do with news coming out of that sector of shipping on Monday. Probably not a lot else happening out there. I want to some other ones. Look at Moo. Clack, another one of these that came down on high volume, back into its gap. And this one had very light volume yesterday. You needed about 6.2 million shares. You came into it with about 2.2 million shares. And, you're able to stay up there for a little while, but kind of like Jaws, he had 3 barrels in him, and that shark tried to hold those barrels under, and eventually all those barrels pulled the shark back up to the surface. Captain Queeg, I liked him. I think people, especially kids, probably haven't seen that movie. If you think that all the horrible movies they're redoing, why Jaws isn't probably one that they'd redo right? I guess everybody knows that they'd have to beat Spielberg at it. May not be able to. Another one out here is the St. Joe Company. We talked about this one, I think, on Wednesday. This one had hit basically 2 previous highs. The first one on September 14th, 2316. 1 million shares started coming into that on November 2nd on 2338. 2.3 million shares. You got into that with about 750,000 shares. You've closed below it, so you've got a decent sell signal. I believe St. Joe is a medical company down here in Florida. Real estate development in Florida. Company operates 4 segments: real estate, commercial real estate, rural land sales, and forestry. They've been pushing these highs for a little while. Look like it would probably come back and fill this gap around 20 and a half. Not the end of the world out here, but probably setting up a larger trading range in this marketplace. But no, not a lot of volume here, especially on that huge blowout of a day. I'll give you a pretty good indication that this thing's going to be in that channel for a while. What do we have? Jack Henry and Associates, of course, selling men's suits, that kind of stuff. Men's Warehouse. MEWNS. Is that right? MR. Huh. That's in Frankfurt. It's got to be a U.S. Hang on just a second. Maybe I'll find it here. I want the German ones. Might show up. Anyway, Jack Henry and Associates, looking at this one, pretty plain. The November first high out here, you had a nice little spike to $40.71. Just getting above that now. Of course, 930,000 shares on the day that everybody pretty much blew up on Wednesday and had a nice run. You had 550,000 shares, 325,000 shares yesterday. Going to probably come in with 2.25 today. And no sign of strength, which is pretty straight for the rest of the markets out here. So not a lot to yell or scream about. And of course, a little pullback then would get everybody ready to go. Let's see if we've got any more volume. Up 5 points, 2.5 billion shares, so not a lot of movement out here. Looking at a lot of these stocks that are well off the highs of earlier today, even with the S&P up a bit higher. Chart Industries, another one that came down on high volume and wrote. We talk about them. Fossil. Been looking at Fossil for a while. Nice stock out here to take a look at. This thing came down on monster volume. A lot of these stocks that come down on monster volume and huge gaps, not uncommon to see 3 tests. If you were going to look at this one short, this one would probably be coming up over the next week. I haven't looked at the options on this thing. But, probably a pretty good indication that you could get 20-25% on this thing. When it does crack, maybe could it go a little higher on Monday morning or something? Certainly not seeing a lot of pushing on this stock, but you've had a push on September 14th with 7 million shares. Since then, the November 2nd high, 1.2 million shares, and basically 1 million shares. So getting less and less push on this thing. A lot of these have gone in and filled up to maybe half of the gap that's been remaining out on them. But we'll continue to see. And what else? Equinix, EQIX, symbol on that. This one's pretty plain. You had the last major high out here at $212. And exactly what they do again? Data center for Europe. So Europe's, everybody says that they're not doing too well. But we'll find out pretty soon. But this one's certainly up at these highs with very, very light volume. Maybe a little bit of short covering. But closed back below 212 on this from the September 13th high would be a fairly decent signal. One, we have a opportunity, a lot of opportunities to run into the Super Bowl. A lot of times our Domino's and Wild Wings, Buffalo Wild Wings, of course, they make more money around this time of the year than anybody else. They popped, which is problematic, though, in that they popped above the March 19th high here, 4.3 million shares, 42.21 on Domino's Pizza, which is DPZ, Dave Paulo Zebra. This thing popped up here. You've had 750,000, 400,000, 200,000 shares today. A lot of these just coming in with this pop. Probably a good indication that I'd say there's probably a 90% opportunity for us to get back to 1448, 1450 in the first couple of days of next week. And a lot of people are going to think like that's the end of the world. If we come back with volume, it is. If we come back with light volume, probably a good chance to catch the next move out here up. I'll look at a few of these Gartley patterns that moved when we come back. See if there's anything out there. Anyway, you still have time to give me a call, 877-927-6648. I would appreciate your call. It's a gloomy day. I need a phone call. Give me a call and pick me up.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And I want to thank somebody in the den for posting an article on the Mississippi. This is from Bloomberg. The drought-depleted Mississippi River will remain safe for barge traffic for at least the next week, possibly until January 26. Basically, there's some submerged rocks at Thebes, which is south of St. Louis. When you think Illinois, you always think of Chicago, but this is like way, way, way. If you've ever heard of East St. Louis, or ever drove through and lived to tell about it, kind of the night of the living dead all around there. I mean, just a horrible, horrible place. I think someone won a lawsuit and ended up owning the police station there some years ago, but it's been a hellhole forever. But right around in there, just a little south of there's a place called Thebes, and there's a bunch of rocks, and they were actually, even now, only half loading a lot of the barges to get them through. But I guess apparently they were able to go and move a few of those rocks. The Corps are now stating that 10 feet of water depth looks good to be through the 26th of January. So maybe a little bit of pressure off those. Maybe that's why we're seeing a little bit of weakness or light volume on those train stocks. But if you've ever lived on the river, in fact, I did for about 4.5 years on the Ohio River on a boat. Just keep an eye on the things change awful quick on that river, and a lot of them estimates they're pretty good about that. But if it gets cold, you don't get enough snow melt. That water could go down in a hurry. But at least I guess with the lower water, they were able to move some of those. Anyway, in the last couple of minutes here, wanted to look at a few stocks and see what we had in the way of some Gartley patterns that we looked out there over the last few days. Let's see. Hog was one that I was thinking about. It doesn't look like we've gotten, looks like it's probably finished its high out here. A little bit of pullback here these last 2 days. Looks fairly good. But if you want to look at a nice Gartley pattern out here, this one actually had a little bit more volume or energy on the way up on my power law vector indicator. But that was kind of the end of a big move. It has formed a bearish butterfly. The target was $50.28, got to $51 even on a little spike on Wednesday, but now pulling back into that range. Not a big move off that B high out here that had 2.2 million shares on September 18th, which was probably what you really wanted to see this thing do and break out if it was going to have a long-term move. I just didn't see a lot of that. What else did we have out here? Since we talked about Click, I'll probably take a look at id out here a little bit. Let me see. Just a second. There we go. Now, again here. Now, we've got just a little bit movement in this. And not a lot to look on that. Kulicke and Soffa, Click and Clack, two stocks that are about the same thing. You know, you did have a little better volume on Kulicke and Soffa up here, pulling back, but that'll be it. Anyway, I'll be in the second hour of the Tom O'Brien Show tonight, talking about technology, of course, from about 20 minutes after on to the end of his show. After me today, we've got Ken, if he's not dead. He sounded pretty sick yesterday, so probably need to call him and give him some chicken noodle soup or something. Didn't sound good on the radio. Like all of us, probably getting that cold out here for this winter. Anyway, you have a safe and wonderful weekend. I will see you tonight on Tom O'Brien Show, and if not, Monday, same time, same bat channel. See you then.